Good morning, students. Today we are going to start with new unit, that is unit number 3, Amalgamation of Firms. So what does amalgamation mean? Amalgamation means merger or combination. It includes merger of two or more partnership firms. So the old firms are closed and a new firm is formed. It also includes one firm takes over another firm or a sole proprietorship business so that the existing firm will continue here. Now, let's start. I will be discussing introduction to amalgamation, the need for amalgamation, calculation of purchase consideration, journal entries in the books of closing firms, ledger accounts in the books of closing firms, journal entries in the books of new firm, balance sheet of the new firm. Now, introduction, I have already done with it. Now come to the needs for amalgamation. So what will be the needs for amalgamation of firms here? The first one will be to reduce the competition among firms. Second, to expand or diversify the business operations. Third, to share and to share the overheads like advertising or promotion expenses. Fourth, to achieve economies of large scale operations. Fifth, to attain the monopoly position in the market. Now, so how to calculate purchase consideration here? First of all, let's discuss what's the meaning of purchase consideration. Here, purchase consideration means it's an amount paid by the new firm to take over the assets and liabilities of the closing firm. So in order to calculate purchase consideration, it's the difference between the assets taken over at revised values minus liabilities taken over at revised values. Now, accounting procedure. The first accounting procedure is on closing the books of the amalgamation firm, that is old firms or closing firm. Second is opening the books of the amalgamated firm, that is we can say it as new firm or purchasing firm. Now, so here accounts in the books of old firms, which is the first accounting procedure. Here balance sheet of the old firm as on the date of dissolution is the starting point of amalgamation. So in order to start with this, we are having various ledger accounts that has to be prepared here. The first one is realization account. Second is partners capital account. Third is cash and bank account. Fourth is new firm account. Now, journal entries in the books of closing firms under realization method. So here I have already numbered it. And as per this numbering, we need to record all the transactions. So the first step, we need to transfer assets to realization account at book values. The second step will be transferring of outsiders liabilities to realization account at book values. And the third one will be transferring of accumulated reserves to partners capital account in the profit sharing ratio. Fourth step is transferring of accumulated losses to partners capital account. Then the fifth step is purchase consideration due. Sixth is assets not taken over by the new firm is sold. Seventh is assets are taken over by the partners. Eighth, liabilities not taken over by the new firm is paid. Ninth, liabilities taken over by partners. 10th, expenses paid. So here we are having 10 steps to be followed. After completing those 10 steps, you are supposed to close realization account and transfer those balance to partners capital account in PSR, that is profit sharing ratio. So here we are having two journal entries. First is for profit, second is for loss. Then after that, you are supposed to settle partners loan, then settlement of partners capital. Now, ledger accounts, as per that order itself, we are supposed to pass ledger accounts in the closing firms. Now, accounting in the books of new firm. Again here, The first step is assets and liabilities taken over. Second, dissolution expenses paid by new firm. Third, goodwill written off in new PSR. Then fourth, excess balance of partner's capital is transferred to a current account or paid. Then the last one is deficit and partner's capital account is adjusted from current account or received from partners. So here we are done with all the journal entries in the old forms as well as the new forms. So thank you, students.